Good morning, option traders. This is Sam the Trader Geek with your Saturday morning, March 22nd, 2025 option review video. Getting this out early this weekend, doing a bit of traveling tomorrow. So I think you'll appreciate having it earlier. And let's take a look at our trades that we have on. So our problem child ADI is kind of testing our metal here. I had originally a stop here about 205. I've moved that down a bit to below this low yesterday. So if we violate that low yesterday, then we'll be out of this one. So we've rolled this once and we're still not faring very well. So this one is not looking too great, but it can turn the corner. We'll give it a little bit more time, but that'll be definitely the last adjustment I make to the stop. So we're down about 88% on this one. Basically, really coming in. Wish I had cut this short earlier, but it is what it is. ALHC, a new play for us this week. Looking really solid on the daily. MACD is very positive. We took our first profit target yesterday, about $1.75, $1.80. Hope you got filled. If not, looks like this has more room to run. We did get what looks like a 52-week high here. So we'll take our time with this one and hopefully it'll reward us. APA finally recovering off the 17 low. We are still down about 62.5% on this. It's an April 20 put, but plenty of time for this to recover. We are above our short strike, so that's a good thing, but still looking good, and we will continue holding this and try to get back our money on this particular one. Baba looking really strong, but giving something in, and we took advantage of the pullback here from the high of 148. And so we have a put spread on here that we put on, and we have a call spread that we have on. So the 130, 110 put spread put on for $2. We're down a bit on it, 58.50. We're still about $5 away from the short strike, and this has until April. Hopefully we see it garner more strength than it has over the last few days, and takes advantage of this bounce and works out for us. And so I took advantage of the pullback to put on a $5 wide, a $20 wide spread for about $5, and that expires in May. So hopefully we'll hold this support area here, and we will get paid on this. I'm gonna keep a close eye on this. If it wants to basically break down below, say the 125 level, then I'll have to rethink my idea here. But here we have a bullish chandelier stop. Again, I don't want to see it close below there. Otherwise, I'll reassess at least our call play. Costco going sideways for about 7 days now and holding up in the, say, let's call it the $900 area. And we're only down 19. Well, we did roll this. We're only up down 19% on what we currently have. And this one started out as a 220. Whoops. Got to tell them about how this jumps when you open up this. Okay, so we have currently the June 865, 835 put spread. We rolled them out after we closed the March ones for a loss, and we kind of rolled them out. So now overall, we're just down about 18% on this play, and we'll just hold on to it and hope that Costco continues to hold this low. But we have a lot of time on it. We also have a good distance away from the short strike at 865. So Costco starting to look a little bit more constructive, baby steps, as it were. CVX really looking good, 7 days up in a row. and we're looking at probably doing another roll of this put spread. So it's 150, 130 put spread. We're $15 out of the money in terms of the short strike, up 78%. And this one is looking really good for us. FXI, along with the Chinese stocks and the K-Web, the Chinese tech stocks, pulling back this week. We'll see. We did another roll of this particular put, and this one is now down 58%. Again, probably a day early on doing the roll. That's okay. We've been doing this one since December, so we've got 3 or 4 rolls, and we've been doing okay with these FXI puts, kind of a lower risk type of entry. And we are at the 35 strike, and FXI is at the 36.5 level. So we've got some room between the current price and the short strike price. GDX really doing well, and hitting a 52-week high up here on, I guess that was Tuesday. And we're waiting for our next price target, 4.25. This is a June spread. And obviously, had I realized that it was going to go that fast to the short strike, which is our 44 strike, I would have not given it as much time. Hindsight is always 2020. So you can see here, we've taken 4 profit targets. We're looking for our next one, 4.25. We're getting a bit of a pullback, although we're holding the 8 EMA. Gold deserves a rest, as do the miners. And I would expect that we will see one in the next couple of weeks, but we'll try to hold on through this pullback and see if we can't march back up into our June expiration, which is a long time from now. Google, we have a call spread, 10-point call spread in expiring next week, actually. And unfortunately, our timing wasn't so great, and we're down 50% on the spread. We're going to have to see some strength from Google right away next week. Otherwise, we may have to just cut this short. We are a bit away from the stop, but we don't have a lot of time on these options. MACD looking like it wants to turn positive, which is good, but we need to see some strength and maybe even take out this parabolic stop and reverse volatility stop here at about $169. Halliburton, really not doing anything, and even with the energy strength, it's basically putting us to sleep. Shows we're down about 100% on these, but remember, we sold a put to buy a call, so the stock is not really going up for us yet, but we have until May, and if energy stocks are going to continue their strength, Halliburton will catch a bid. We do have a positive parabolic stop and reverse, but a bearish chandelier. We need to take out the 25.75 level to turn that chandelier stop into a positive for our purposes. Intel, just down and up and down and sideways, so all over the place. We've taken 3 profit targets on this one. Quite honestly, our call spread is a little bit out of the money. It starts at 27 strike, but we got close up there. We got up to the 26.41 level on Tuesday, and we've pulled back. So we have a longer term put strike that's closer to 20 in June. So we have time on the call spread, but even if that doesn't pay us, we still have the put premium that is decaying in our favor, and we have taken 3 price targets, and we are still above our cost on this, which was about 30 cents to start, and we've done at least 1 roll. IWM, the small caps, we're looking good on Wednesday and Thursday, and Friday they pulled back a bit. We took 1 profit target this week. We're still up at about 76% on this first run at it. So if we're going to see strength in the markets, I would imagine that small caps are going to participate. And as we saw earlier with the rut in the other video, we have a positive MACD on the small caps, which is a good thing. Looking at Lyft, this is a long-term put that we have. It's a $10 put. We're about $2 from the short strike. We've had luck with this one before. It's a cheap, slow play out in June. We're still down 42%, but that's a factor of volatility getting pumped into the options more so than the price action in Lyft. And looky here, we've got a fast line flipping over the signal line on the MACD. So that's a positive for Lyft. Meta, we took one off last week and we put a new combo on. We took off a put spread and we lost money on that. We got right back on the horse and started this one. And mostly sideways actions, but we were able to take our first profit target on Thursday on Meta. And so our next price target is 17.75. So coming a long way from 740 all the way down to the 574 level. So looking good, looking like it wants to head up, and we could use a curl by the fast line of the MACD to get us to the positive area. So Meta starting to look better than it was. Let's put it that way. MRK. Now this is kind of the definition of more sideways after a nice run from the 81 level, and we got as high as the 97 level. And it looks like we might pull back and the MACD might roll over. We've taken 4 price targets. Going to be watching this one this week. I don't want to do a round trip of this, but I updated the stop here. It was at 72.50. Now we're at 88.50. That's a closing stop. But we have harvested a few profit targets, so still doing good. A play we put on yesterday, Friday, is Nike. I was impressed by how much it came off the lows. And although Nike could go lower, I thought it was time to dip our toes into a combo play that's bullish. And that's what we did. And if you didn't buy the combo play, maybe you're waiting to see next week what happens, or you're buying some common in a long-term account. I don't see any reason not to. We have a wide stop with this. It's about $10 away, and we're just getting started. We bought the call spread and we bought the put spread. And so let me just take a moment to show you what I sometimes look for, and this is not the definitive way I always do it, but when I'm constructing a combo, which means I want to buy a call, I want to sell a call, and I want to sell a call put spread to finance it. Let me maximize this for a second, kind of show you a little bit more. So in Nike, we went out to January because I want to give myself a lot of time on this one. This could be a 1 to 3 year play, quite honestly, but we'll start out and we'll do, I look for close to the money strike. And then I try to get to, say, like a 20 to 30 delta to sell. And so I came out to 90. I could have gone to 100, but I wasn't getting much premium with it. And when I buy or sell a call against another one, I want to collect about at least 1/3 of what I'm paying for the call to make this cost reduction worth it and the limiting of my upside. Now, on the put side, I generally try to go to about a 30 delta when selling premium, or I look for a nearby support point. In the case of Nike, 60 was the COVID low, and I thought this would be a good spot to sell a put And so I sold the 60 put spread. And given that we have a $20 wide put spread, I generally like to do a $20 wide put spread. So we have a $20 wide call spread. I want to do a $20 wide put spread. And but I looked at this and I said, you know what, that's a little bit too much risk for a stock that has not shown that it's bottomed yet. So I'm only going to take a $10 wide uh, put spread to sell and finance this. So this is kind of the approach I take, and I look at a lot of strikes and a lot of expirations until I decide on which ones to do. And this comes with a bit of experience, obviously, but I want to know that when I'm doing this, let me confirm and send this one and show you. Um, and this is an account that's not funded. So I want to see a max profit that's more than max loss. And you can see here 1686, max loss 1314. And then I also want to see that getting to the max profit here, it's a 22 delta, so about a 22% chance, is a lot better than getting to the max loss, which is at 12%, or just about half of the chance of getting to a max loss, a max profit. So that's kind of a quick way of showing you how I pick some of the strikes in a combo play. And it always helps when you're buying calls or buying call spreads to reduce their costs. It increases the odds that the play will be successful, although it does increase your risk overall. But reducing the debit that you pay for a call spread or a call has always helped and increases the odds of success, even though it does increase the risk somewhat. Hopefully you found that a little bit helpful. NVIDIA, we still have two plays on here. We have let me drop this down. So come on, show me NVIDIA. All right. Okay. Go back to the chart. There we go. NVIDIA really definition of a sideways move this particular week, even though we had the big NVIDIA conference. We've taken for-profit targets on this one. This one is another combo with the 115, 140. Probably been taking more profit targets than I should have by now, but we haven't seen a really big move out of this one, but we'll take it. We paid 475. We closed at $7.17, and our last profit target was 8.25, and I think that was on Thursday, actually Wednesday. So that particular play is looking good. If we look at the covered call, we started this in December, and we have been selling the 140 strike call, and now we're out to May in terms of what we have sold. And overall on this play, even though NVIDIA has lost about $30 since we put this stock on, we're only out about $4 from based on the premium selling that we've done. And so this is a kind of a nice result, and you can bet that assuming that NVIDIA doesn't collapse, we'll continue with this play, and eventually NVIDIA will rally through the 140 short strike and get our stock assigned. But by then, we will have made some nice profits. It's a slow way to make money, but it's a lower risk way to do so. And I hope you like that kind of play. Okta, looking really good and really going sideways on the week, but with definitely a bullish tint. I can see this breaking out of the recent 52-week high that we hit after earnings. So I like the look of this. Taking a look at the weekly chart, nothing wrong with this. Looks like it's bull flagging on the weekly. So MACD solidly positive, and we're staying overbought. So I like Okta. I think it's one of the better plays on the board and has held up very well through all the chop this week. We just needed to bust a move and head higher, and we can get to our first profit target, which is $4.95 or a 50% profit target on our premium paid. QQQ moving sideways on the week. MACD looking like it wants to turn. Now, we put this on way too early, and so it's not likely that we're going to profit from the call. So if we take a look at the call spread, which expires this week, so the 28th, and I really wish I had given this more time. Let me close this for a second. We have the 500, 510 call spreads, and these are a 9 delta, so they have a 9% chance of closing in the money. We'll probably take any strength next week and close out the call spread. And we're also short the June 30th 420 put, which is a loser at this point. But if we hold on to it, we are $60 away from that short strike. We should be able to make up a lot of ground. And even though the call spread itself might be unprofitable, if we hold on to this put long enough, it'll pay us with enough premium decay and collapse to bring this loss down to negligible. We probably won't make money on this play, but that's the kind of thing with an inflection point spread. If the market really moves a lot, you don't lose a lot, but also you don't make a lot either. But if it does move in your favor and moves quickly, you can make a lot of money, get the full width of the call spread for a very low cost. We paid 16 cents for this particular QQQ combo or inflection point spread. Similarly, with a SPY, we have closed what was the March 21st 590 600 call spread. We sold those for 7 cents the week before last, and now we're holding on to the June 30th 505 put. And we'll just let this thing decay. We are essentially 57, 58 points away from that short strike. So there's a lot of time on this. And again, we can recover a lot of this loss that we have in this spread by just holding on to that short put, assuming you're in it. Now, TLT kind of peaked out on Thursday and came in a little bit on Friday. Make sure I have this chart right. We did close out our call spread, and had you held it into Friday, you would have gotten the full value on that call spread, the 85.90 call spread. We closed it for about 470, 476 or so, close enough. And we still have the short put that's in April. That's the I believe the April 86 put. Actually the 88 put. So we're a couple of bucks away from it. We've had success with TLT. These puts we've been doing since November of last year. We're down 30% on these, but we have plenty of time till expiration. So we'll probably continue this one unless the bonds collapse again, which they show no sign of doing. But TLT finding resistance at the 92 level again. Perhaps the next time will be the charm and can continue upward. Finally, we have Walmart on our list. Stabilizing here in the 85 area. We have an April 90.75 put spread, which in retrospect, we were a little bit early on, and we sold it for about 65 cents. Right now, we're down big time on it. The closing stop we had is 85.50. We never closed below there, but I may change the stop a little bit and give us a little bit more room. I like Walmart a lot. Um, and we will see if this one can come back for us. We have plenty of time. It is a wide put spread that we were a bit early on, but I have faith that this one is getting ready to bounce back. If we see any bounce back in the market, and especially in some of the retail stocks. So they took $20 out of the stock, so that's about a 20% reduction. But I still like Walmart. I still like this play, even though it looks ugly at the moment in terms of premium that we collected on this particular play. Well, that's all we have for this week. We do have about 25 trades on, so the list has gotten long. I'm going to try to keep it to this list, although I've seen some really nice plays out there. I'm going to have to start closing some of these so our list doesn't get too much longer than this. I really like to keep it around 20, but we are at 25, and we do have a few old trades in here that may be close to fulfilling their targets and closing out. If you have any questions for me, Sam the Trader Geek in the room, or Trader Geek Sam in the room, otherwise at Trader Geek on Twitter. If you don't follow me there. And I appreciate you watching, and I appreciate any feedback you have about what's going on in the room and on the videos. Take care, enjoy your weekend, and I will see you on Monday. Bye-bye.